All right, we are back with Gareth Soloway, Chief Market Strategist of In the Money Stocks and Verified Investing. Gareth, how you doing?
I'm doing great, Greg. Thanks for having me back. It's always a pleasure.
Yeah, absolutely. We were talking offline before, and people love it when we get together. And you and I are talking about how we can do more collaborations coming up in the future on a regular basis for people. So stay tuned, folks. We're going to do more of that. But one thing you were talking about is you have a new educational course with Verified Investing that you created. You want to talk about that real quick?
Yeah, just that the idea behind it is there's so much misinformation, even on the technical analysis side. A lot of people kind of think, oh, that's a pattern, that's a chart setup. And in reality, it's one of the reasons why people think charts don't work and technicals don't work is because they're finding false information. And so what I really try to do is share all the secrets that I've learned, all the chart patterns, the exact kind of definitions, how to utilize it properly in terms of trading. And again, this is trading crypto, this is trading stocks, commodities, doesn't matter. But it's really the what I consider to be the purest form of education out there. And again, for people out there, verifiedinvestingeducation.com is where it's at.
Yeah, awesome. And it's interesting, like a lot of people, and we're going to get into Bitcoin in the markets here in a second, but a lot of people don't think technical analysis works with crypto. And I think what a lot of people don't understand is what technical analysis really is. You want to talk about that for a second?
Yeah, so technical analysis is basically human emotion, right? And this is the beauty of it. Does the crypto market have emotion? Absolutely. So that's why it's going to work for it. Now, you might want to make small adjustments. Like for me, when I'm trading stocks, if you're trading Apple, 90% of the volume is institutional. So there's going to be a limited amount of emotion there. There's still emotion, but it's limited. Crypto has more emotion because it's more retail. So for instance, a technical support, you might pierce that level versus just hitting it in the crypto markets, but it's still going to get a bounce. It's still psychological. It's still human nature. And that's really what charts are. It's human nature in chart form. If you can read humans, you can trade stocks and crypto.
Yeah, and a lot of it is really not so much anymore with the algorithms and with the bot, applications that are doing automated trading. A lot of those are just set on those technical levels, and a
That's
lot of
right.
it is just that, especially in traditional markets. I mean, I don't know what the percentage is, but it's got to be 70% of those trades are automated now.
Yeah, I would say so for sure. And the interesting thing about it is a lot of bots, right? They're set up to, algorithms are set up to sell when selling starts, and so it's not so much that you do have ones that are set up to buy at key levels, but it's also they also turn into be momentum chasers. And for me, that's actually more beneficial for me because it drives price down into these technical levels where then it'll start to reverse. And then once that reverses, those algorithms are going to cover their shorts or they're going to sell their long, and it actually works in your favor as well.
Yeah, awesome. Well, speaking of which, Bitcoin is on the move. Why don't we go ahead and jump in and take a look at that? Because I believe it is testing a major technical level right now.
Yeah, absolutely. So what we're seeing here on Bitcoin is number one, just recent. Let me go to my 10-minute chart because this is a pretty recent sell-off just in the last hour or so. And we can see it all of a sudden starting to dump to the downside here. And if we go back to your daily chart, one of the things I'm watching here is that if you look at the lows of this consolidation pattern, right? Look at this, right? If we just draw a trend line right across here, you essentially are right at that area. So in the short term, this 26,700-800 level, very, very important. If this breaks, then you're headed to this level, which is at 25,000. So you are at a very pivotal point. A lot of people have been speculating in the crypto markets that we're just about to this big breakout. I'm not a speculator, right? And I think that's when we say that word, I'm speculating it's going to break out. But in reality, a good trader doesn't speculate. We go with probabilities, right? It's probability driven. And so for me, I shorted a little Bitcoin right up here because, again, on a psychological basis, this was the cycle midpoint of the bull cycle, right? We talked about this even just a week ago or so when we had our last chat, Greg. This was going to be resistance. And then you could see it working here. And so price is going to struggle right there. And so for me, it's until it's broken, it's resistance. That's just what it is. My heart might say, "Oh, I really hope it breaks out." My gut may say it, but in all honesty, they mean nothing compared to what the charts are really telling us. And so for me, it's short Bitcoin until it breaks above this area, in which case I would just cover and take a small loss. But ultimately, probabilities tell us it should head lower.
Yeah. So on that note, are you still looking for the potential of a 10,000 Bitcoin basing level for 2023?
I am. I am. You know, again, 2023, could it be early 2024? It's hard to know. But the bottom line is that if you look at past bull markets, and I know if you've been around a long time like me, you know, you've seen real estate bubbles and crashes, you've seen bond market bubbles and crashes, and you've seen the financial crises and so forth. So .com. I still can't recall the last time I saw a real bear market bottom where bullishness came back this fast as it has in crypto. And that's concerning to me. They always say you got to flush out the weak hands. And I don't really believe that crypto really ever flushed out the weak hands when it was down in the 15.7-ish range. So that's a concern to me. I also think that, you know, if you look at interest rates where they are, the Fed has just said in their last meeting, hey, we're leaving him here. We may not hike them more, which I don't think they will do much, but we're not going to lower them for a significant amount of time. That's going to be very hard for a risk asset like Bitcoin to deal with. And then you also have a scenario where you're going to get the stock market, in my opinion, to realize we're going into a recession. It's got to price that in, which probably means 20-25% downside in the S&P. How does Bitcoin react to that? And I got to believe that there's bleed over and selling pressure there as well. So now listen, on a technical basis, if we were to establish ourselves above 30,000 here and hold there for a week, then you might convince me that the lows are in. But as of now, we're not above there. So I'm still in the camp that there's still a bear market here. We might go lower.
Yeah. I'm not looking for a bull market right now. You know, I do think that maybe that 15.6 level could possibly hold if we just continue with a mild recession, you know, mild continuation of rates where they are versus, you know, I think it would take a big event to break that level and get an ultimate sell-off like we saw in 2020, you know, like we saw in 2018 when the credit markets froze up and the Fed had to pivot. So Bitcoin has followed the S&P and NASDAQ, you know, the last couple of times that there's been major sell-offs. Of course, it wasn't around 2009 when the market sold off, but we saw what happened in 2020. You know, all risk assets were liquidated.
That's right. That's right. And that happened in, I mean, almost every situation, right? 2018, when the markets collapsed, risk assets fell as well across the board. And you basically go back to any point. When there's panic in any market, it tends to bleed over because people get panicked overall.
Yeah. Let's take a look at traditional markets real quick. And, you know, piggybacking on what you said with the Fed and their policy, you know, they may or may not hike again, depending on CPI data, jobs, all that kind of stuff. If it comes in hot, they're going to hike 25 again. If it comes in, you know, softening, they might just hold, but they're definitely not going to back up anytime soon. And that's what's going on. The markets have priced in, you know, rate cuts, I think, by Q3 now.
I know.
And the markets have been wrong this entire cycle. They've been pricing in the Fed pivot and rate cuts pretty much the whole time on all these bounces, and it hasn't happened yet.
Yeah, and I think that's amazing to see the disparity where the market is like being like, no, we will not accept what the Federal Reserve is saying. Part of that, honestly, is a loss of confidence in the Fed, right? I mean, the Fed has said this before, and then they've pivoted very quickly. The only thing I would like to point out about that is that in the past, when they've kind of changed their mind, like 2018, great example, they were hiking rates, market dropped by 20% in something like 6 weeks, and then they reversed and actually started cutting rates. But that was a different time because inflation was 2% or under. And that's the kicker here, is that how much pain is the Fed going to let the economy have as long as inflation's above that 2%? I do think there's a pivot point. I just don't think we're going to get to that point yet this year where the Fed is willing to cut.
Yeah, and there's so much liquidity still sloshing around out there. I mean, all the money that was pumped into the economy, it's still there. So it's got to go somewhere.
Yep, it absolutely does. And we know the banks, I mean, the banks have tapped the window at the Fed for billions and billions of dollars. We've seen the balance sheet of the Fed soar again. Again, a lot of that's to protect the banks in the near term. But the Fed will make sure, in my opinion, the Fed's not going to let inflation go up. And part of this is a mentality of the Fed, right? So the Fed realizes, and I think politically this has been pushed on them as well, which is rightly done, is that inflation hurts middle income and lower income. When you have, you know, free money, a lot of the rich get richer, right? So the question is which one is your greater evil? And when you're talking about middle and lower income, then it's obviously inflation is the greater evil than a market decline of 20 or 30%.
Yeah, and the Bank Temporary Funding Program, BTFP, you know, to be clear, that is not QE. A lot of people are calling it QE. They think it's QE. It's not the Fed purchasing assets. That was the Fed. That's the Fed lending money to the banks.
That's right.
Yeah, you know, so that, you know, to cover depositors, and, you know, so that's all that is. So that,
yeah, I've seen so many posts on Twitter about like, oh, here we go again. Look at the balance sheet, money's everywhere, and I'm like, no, it's not quite that this time.
Right, and it's a difference on the balance sheet. So the Fed doesn't own it; it's a liability on the banks. So it's a loan to the banks; they have to repay it, and they can't use that money to lever up. They can't use it to lend. It's liquidity for them to cover redemptions when people go to pull their money out of the bank.
And, and in fact, what's interesting is that these crises at banks are actually going to tighten liquidity in terms of a lot of these banks are not going to be free lending money very easily that are in stressful situations right now. So in a weird way, it's actually helping the Fed tighten with the crisis that's going on.
Yeah, and that's the two biggest risks that haven't been assessed yet. Number one, and Neel Kashkari came out over the weekend and said, we don't know what the punitive effects of that tightening is going to be. He said chances of a recession are good. We just don't know how bad. And the other thing is the shadow banking, the equity funds, the hedge funds, all the money that is being lent by, private equity into the markets that are all upside down now. That's the commercial real estate, MBS market. All those assets are upside down on bank balance sheets, on, equity and hedge fund balance sheets and all that are, life companies. That's the kind of stuff that hasn't, hit the fan yet, and could be the one that really is the next shoe to drop that there is no rescue for.
Yep. No, I agree. It's the one thing I do know is the next 6 to 12 months are going to be very, very interesting. And it's going to be scary at some points, but remember, and I always say this to people, is that scary means opportunity too, right? And so you have to this is why it's good to have a little cash on the sidelines, is you just never know when the great deal is going to come up.
Scroll back to the bottom of 2020 there. And bring in the top two. So there you go. So the bottom there is scary.
Right. This was scary.
Look what happened afterwards. A 20x,
right.
In a lot of assets.
Right. That's right. And just be fair. I mean, this is when the Fed came in with more. I mean, we thought we had QE before this period, and then what they did after was unprecedented. I mean, it's just amazing. And by the way, the U.S. government, right, sending checks out. I mean, there was just people were at home. I mean, this was like the liquidity bubble of the century, you could argue. I mean, it was just incredible.
And that was the world coming to an end economically. And we saw at what level the Fed jumped in, what level the government jumped in, and everybody. And if you go back to 2009, same thing. It took it down, about to those same types of levels. And, that's when the Fed jumped in. And generally, that's about a 50% drawdown on, Dow, S&P, and NASDAQ when they're going to do something.
Yep. And by the way, I mean, I'll just show a chart here, but one of the reasons why this market to me is scary, and I've said this before, how we may not hit new highs for 10 to 15 years. And people, it's all the young people that haven't experienced like the dot-com collapse are like, oh, that's impossible. Like, you're insane. But if you go to your larger time frame, right? Like if you go to your monthly chart and you go back to the previous bubbles, right? And again, here's your dot-com run up, your pullback, your 2007 run up, which was before the financial crisis. That was the bull market there. And then look at what we've just come out of. And let me remove these lines. But that's, I mean, insane. like this was like a big wave. This is like a tidal wave. I mean, and like I look at that and I'm like, dude, that scares the crap out of me when I see like the amount of upside that was driven by quantitative easing and these printing of money. And it makes me aware of how bad. I mean, people to me don't have any concept of, if we really got in the crap, if it really hit the fan, what could end up happening. I mean, I've even speculated that if we got the ultimate reset, we've never retraced to the highs of this double top. So charts generally, they like to break out and then they like to retrace and then they like to go higher. We never retraced because the market never got that chance because there was so much money printed. So in my head, I'm like, oh my gosh. And again, this is worst case scenario, but is it possible that we could ever go back to that level? I don't know.
Yeah, that would be a tough one. I mean, that's a negative drawdown there at the end of the day.
Yep.
But yeah, there's so much liquidity out there. It's hard to imagine that we could get to those levels, but it's possible if everybody just said, you know what, we're just going to sell, let it go. The debt has come due, the bill has to get paid, and everybody's just writing down debt everywhere. But you could revert to those levels, and everybody goes into treasuries and the dollar, and then start it all over again. The thing is, though, if that did happen, boy, the rebound would be ferocious.
Man, amazing. Yeah, I agree with you on that one. That's a technical support level I'd be buying for sure.
Yeah, awesome. Well, Gareth, I appreciate you taking a few minutes out and sharing your thoughts with us today.
It's truly my pleasure. I love our conversations, buddy. Have a great one, and look forward to talking to you soon.
Yep, same here.